Welcome back. You're tuned into Market Fatafat. We're taking you through all the stocks that are in focus in today's trading session. Let's get going yet again with all the stocks then. Jindal SAW is a name that was soaring away in trade, in early morning trade. It has given up all this gain. It was up almost 8% in trade, and look at that. It reeled under selling. Gave up all those gains under selling pressure and still reeling under selling pressure, down 0.8%. But Jindal SAW shares surged after the company said it has entered into a share purchase agreement with Renew Energy, Green Energy Solution Private Limited to acquire up to 31% equity share capital in a Renew Green MHH1 Private Limited. The acquired entity engages in power generation from the renewable sources. However, the company is yet to start its operation, and the acquisition will allow Jindal SAW to procure electricity at a concessional rate. Jindal SAW also further added that it aims to complete the acquisition by 31st of May 2025 or any other date that may be mutually decided between the parties. On the back of this acquisition, Jindal SAW is in focus today.
Okay, Jindal SAW seeing some pressure right now, but let's welcome on board Akshay Bhagwat, the Senior Vice President of Derivatives Research at JM Financial Services. Akshay, good afternoon and thanks so much for joining us. Of course, we have Janay joining us once again from our in-house research team. Good afternoon to both you gentlemen. Akshay, coming to you for your first stock. You've picked out United Spirits for us on the charts. Now, last 6 months, the stock has done decently okay, between 20 and 25% returns. That seems to have slowed down over the last 1 month. Tell us, what's the outlook going ahead? Do you believe that the pace will come back? The pace of the gains that the stock has seen will come back, or do you believe that there is some slowdown that we can expect on this front?
Good afternoon. Thanks for having me on the show. So it's more of a momentum pick. If you look at the price structure of United Spirits, the last 3 days, the stock has caught good momentum. In fact, if you look at the daily charts, there is a possible breakout of an inverse head and shoulder, which is a bullish pattern, which promises you a minimum target of around 1650 on the upside. So I'm pretty bullish on the stock, even from a short-term perspective. The supports are 1550, target area would be 1650, and even from a monthly perspective, if you were to hold and keep it for over a month, I believe 1600 plus target, 1700 plus target should be in the making.
Alright, moving on then from United Spirits to Janay, DLF is the name you have picked out for us. Again, a CLSA note that's come out. Tell us, what does this note say?
Well, definitely DLF is in focus. We have a note by CLSA who have reiterated their outperformance rating and have raised the target price to now 975 versus the earlier target price of 870. Now what they basically say is that DLF has sold about 130 to 150 units in the Helios, which is worth about 10,000 to 11,000 crores in total. Now such demand is positively surprising for CLSA, and they believe that the sales so far are likely higher than their assumptions for total FY25. And on back of this, DLF is in focus. Stock is currently has traced down a bit from the highs, but currently trading flat.
DLF trading flat right now, but well, it's not in the red right now like the rest of the market, because the next stock we're going to highlight has a positive news flow coming in but has given into the market pressure right now, and that's Ewise Financials. The Reserve Bank of India has said that it has removed the business restrictions that had been imposed on 2 of Edelweiss's group entities, HCL Finance Limited and Ewise Asset Reconstruction Company. The decision, effective immediately, follows the company's successful implementation of remedial measures to address regulatory concerns that were flagged off earlier. After extensive engagement with the Apex Bank and demonstrating compliance with regulatory guidelines, both entities addressed the supervisory issues raised, and satisfied with the corrective steps and their ongoing commitment to the regulatory adherence, RBI has lifted the restrictions, allowing the entities to resume normal operations. Remember, all the way back in May of this year, RBI had restricted HCL Finance from undertaking structured transactions involving wholesale exposures, except for account closures or repayments in the normal course of business. So positive news flow coming in, restrictions being lifted from 2 of the group's companies, but the stock seems to have given into the market pressure, 3% lower as we speak.
Alright, Akshay, coming to you then. You picked out a name from the Pharma pack. Sun Pharma is the name. Tell us, what do you see on the charts for this one? If I look at the chart for this, in the last 1 month, it has given some 3% return. It has moved 18 or 19% in the last 6 months. Decent performance. Tell us from here on, where is the counter headed?
Absolutely. So if you look at how the day started, Pharma Pack had a tinge of green, and many of the stocks have been seen picking up momentum. So Sun Pharma is on the verge of a possible breakout. Last 8 to 10 trading sessions has been in a range 1800 plus minus 10 odd points. But the way the price structure is, the way the data points are, they are possibly hinting for a breakout above the levels of 1840, post which you will see levels of 1900 to 1920. So I'm bullish on Sun Pharma. Buy at current rate. Your stop loss should be below 1755, and possibly the momentum pickup point is once it crosses the levels of 1830, post which you will see levels of 1900 plus. So buy Sun Pharma. I'm positive on this pharma counter.
It's a very positive view coming in from Akshay on Sun Pharma. Janay, coming to you now. Let's talk about a space that has been a buzz recently, but today under a slight bit of a pressure, and that's the real estate pack. Tell us why you've picked up this entire pack, what stocks to watch out for, and what does the brokerage note say?
Well, definitely the real estate pack is in focus on the back of antique note. Now what they say is that the players except Godrej Properties and Macrotech Developers, that is Lodha, there has been a muted H1 sales for other companies. Also the channel check suggests that the approval challenges in Bengaluru have now receded and the launches are now back on track. Now the companies with significant launch pipeline in BLR, they believe that they are optimistic on them and they will be able to launch their properties in Bengaluru, enabling them to surpass the guidance for FY25, and top pick for them remains Aditya Birla Real Estate and Oberoi Realty. For Oberoi Realty, they have a buy rating with a target price of 2688.
Okay, positive view coming in on Oberoi Realty. Lots of brokerages in fact have been writing on Oberoi Realty recently with a positive view. So that's definitely going to be a stock to watch out for. But let's shift focus and talk about Coromandel International, because it has been seeing quite the momentum in the last couple of trading sessions. Today it's on the back of a Nuvama note where they've upgraded the stock to a buy rating from a hold rating, and the target price has been set at 2,347 rupees. They believe that there is disciplined capital allocation, robust return ratios, and growth in the adjacencies that merit a valuation premium. They've revised their FY26 and 27 EPS upwards by 2 and 4% respectively. They're also feeling optimistic on the stock due to the backward integration that could boost the EBITDA per ton by 40% going ahead as well, and the growth opportunities in the adjacent areas such as CDMO, specialty chemicals, drones, nano fertilizers and biologicals are some more tailwinds that Nuvama is flagging off for Coromandel. So positive outlook coming in, upgraded to a buy rating from a hold rating earlier, and on the back of that the stock is up almost 1% as we speak.
Alright, coming to you then, Akshay, Tata Steel is the name that you picked out for us. Now, this counter has been seeing consolidation in the last 6 months. And in fact, in the last few weeks, actually, it has started moving. Tell us from here on, where does this counter go? Do you see, this counter recovering, re-rating in this counter?
Well, from the metals pack, Tata Steel has seen a recovery, but I would label this more as a relief rally pullback. And really the trend, if you look from a last 3 to 4 month perspective, it's still in the red. The trend is still weak, and we have seen this week's beginning with the break of the prior week's low, which is slightly a negative development from the momentum perspective. So I have a slightly bearish view from a trading perspective on Tata Steel. I'm expecting the stock to revisit its recent swing lows, which was tested 3 to 4 weeks back. That's around 135, 137 level. So a slightly bearish outlook from a short-term trading perspective in Tata Steel. And if you're shorting the stock, 150 should be your stop loss on this short trade.
Well, short trade coming in on Tata Steel from Akshay, but on that note, we'll slip into a short break on this edition of Market Fatafat and keep it going with all the big buzzers on the other side. Hi there, welcome back to Market Fatafat. Let's talk about two stocks that have been garnering attention ever since the market opened yesterday, because this announcement came in late last evening that Ambuja Cement has announced the amalgamation of its subsidiary SII Industries and Penna Cement. This amalgamation is on expected lines, but this is however negative coming in for SII Industries, and the stock is also reflecting that because that stock is lower by 10.5%, deeply under pressure. No doubt Ambuja Cement's also down 1%. The objective of this merger within the parent company is to become more competitive and increase efficiency through this merger. The share exchange for SII looks negative because Ambuja will be issuing 12 equity shares for the face value of 2 rupees each for every 100 equity shares of SII Industry for 10 rupees each. Also, the SII Industries shareholders will get 11% discount to the current market price of SII Industries, which is 77 rupees per share, but has slipped down now to 68. The actual CMP of SII after amalgamation basis share exchange is expected to be 69 rupees per share. Currently, the stock has reached those levels after the market pressure seen today. The timeline of this transaction is expected to be completed within 9 to 12 months. Analysts say that this arrangement was much expected since the day SII and Penna were acquired by Ambuja Cements. They don't see any additional material impact in the near term post the amalgamation, and there are already intercompany supply agreements for saving costs. So mixed views coming in, but the street is not taking this exchange ratio very well for SII Industries, down 10.5% as we speak.
All right, moving on then from Ambuja Cements and SII Industries to Jinay Epidia for M&M Financial Services for us. Tell us what's the news flow here?
Financial services is in focus. As we have a note by Citi, they have a neutral call on the company with a target price of 300 per share. Now what they say is that looking forward, there's a nuanced scale up of mortgages, ramp up in MSME and lending space, and also looking forward they are trying to build up the space in payments, partnership and leasing business going forward. Now the company is guiding for 5 to 7% of disbursement and high teens AUM growth for FY25. They also believe that the OPEX or asset at 2.7% with an 10 basis points upward bias will aggressively expand the footprint for the company, and they are re-evaluating the equity raise in second half of FY25. So positive note on M&M Financial Services. However, company currently is trading flat with a loss of about 0.07%.
Market pressure also, M&M Financial trading very flat. But Akshay, you've picked out ITC for us. Now we've just had the news flow that the record date for the hotels business demerger is 6th of January, effective date 1st. And tell us what are the levels that you're spotting on this chart. Also, how is the demerger expected to affect these levels going ahead? Because if you take a look at the last 3 months, 6 months, even year to date, the stock has done absolutely nothing. In fact, it's eroded well slightly. So tell us what's the outlook going ahead.
So I agree, last 3 months have been a pain point for the stock, and in fact if you look at the entire FMCG pack, they have seen a sharp fall from their all-time highs. In fact, if you take it positively, ITC has not seen that much pain. What I see from the charts right now is the stock is in the process of forming a short-term base, which is pretty evident at the levels of 460. Now it is the time that the stock recovers. A possible double bottom on the price chart just gives me confirmation that a breakout above 480 is in the making, and you will have targets of around 495 to 500 very soon. So buy is what my recommendation is in ITC. It's more of a trading recovery till 500. Supports are 460, below which you can place your stop losses.
All right, moving on from ITC to Vodafone Idea. Now, for Vodafone Idea, Geojit is maintaining a hold on this counter. In fact, they have cut its target price for Vodafone Idea to 8.6 rupees. And earlier, the target price was rupees 17, which was set in August this year. The target price still suggests a 10% upside over the Tuesday's closing price of 7.8 rupees. Now, while the recent tariff hikes have increased Vodafone Idea's average revenue per user, or ARPU's revenue rose only marginally. Vodafone Idea also expects the impact of the tariff increase to continue to be seen in the ARPU and the revenue for the next 2 quarters. However, it expects the subscriber base to grow with expansion of its 4G coverage and rollout of 5G in key geographies in the Q4 of FY25. Also further, its fundraising proposals through the issuance of equity shares or convertible securities are expected to support its expansion plans as well as pay down the debt. The domestic brokerage has maintained its hold rating on the stock with the revised target price of 8.6 rupees per share based on the 11.9 times FY26 estimated EV/EBITDA.
Okay, so that's the reason why Vodafone Idea is in focus. 0.5% uptick coming in on that stock. But let's talk about the next stock, and that's LIC Housing Finance. This is a buzz on the back of its management meet, and Citi has come out with a note of its management meet key takeaways. There's a temporary hitch in the Hyderabad and Bangalore market, which makes up roughly 1/4 of its disbursement. That's adversely impacting the disbursement growth as well. They've retained their 10% AUM growth target, but Citi is building in only a 7 to 8% growth. Seasonally, a robust third quarter might not be evident this year, though there may be marginal rise, and tight liquidity is pressurizing borrowing costs, but that is likely to be offset by favorable yield levers. Now, what's really biting the stock today is the commentary on NIMs, because NIMs are likely to sustain at the lower end of the guidance of 2.7 to 2.9%. That's what the management has alarmed against. Resolution through the ARC sale for 2.5 billion rupees, that's 250 crore rupees, to release provisions, and yield levers will include rise in wholesale book share, the plan to scale portfolio of affordable housing launched in September, and the push towards rate structure tweak. So lots of mixed comments coming in, but the one that's talking about the NIMs being on the lower end of the guidance of 2.7%, that's something that the street is not taking very well. A 1% cut coming in on LIC housing.
All right, moving on then. HCL Tech is what you picked out for us, Akshay. Now, this counter has done well for itself. In fact, the entire IT pack has been holding the fort in a market downturn. Tell us, for HCL Tech, what are the levels that you're penciling in?
So a very strong uptrend is still intact in HCL Tech, and in fact, if you look at the entire IT pack, it is one of the most resilient or the strongest sector to be trading or invested in the current market scenario. If you look at the HCL Tech price chart, recently it has made a short-term bottom at the levels of 1935 and is again setting up for its next round of upside, which should see the stock getting past the levels of 2000. Although overbought, the momentum is very strong. So we are suggesting maintain a buy, hold, or buy the current level. From a trading perspective, your stop losses should be below 1925 and the target area should be around 2025.
Okay, so 2025 on the upside for HCL Tech is the target that Akshay is spotting. Janay, coming to you now, you've picked out another basket of stocks, and that's the insurance space today. Tell us why you've picked this, why this has made it to your radar, and I believe it's in the back of a brokerage note.
Well, definitely the insurance space is in focus. We have a note by Citi on the back of management of ICICI Prudential and HDFC Life's commentary. Now, what they are saying is that the absence of a significant divergence in mis-selling ratio across major channels. Also, there is a multiple levers to sway through this near-term volatility is what they believe. Also, the implementation of risk-based capital, IFRS, and change in licensing norms will be beneficial in long term for the companies. Now, the focus on absolute VNB growth, VNB margins to be product of product channel mix, and on the back of this, the top picks in the life insurance space remains HDFC Life and SBI Life. So both the counters will be in focus.
Okay, so both of these stocks in focus today. Let's move on, talk about HCC, which is Hindustan Construction Company. Now, we understand from our sources that their QIP issue of 600 crore rupees has been fully subscribed. They've seen some very strong interest coming in from institutionals and the likes of SBI Fund, Autim, Shriram Mutual Fund, BNP Paribas, Citibank, and Samsung Family Office have also participated in this issue. Positive news flow coming in. This is, of course, what we understand from our sources. Remember, they had launched their QIP of 600 crore rupees just a few days ago, and that seems to have been fully subscribed, and a lot of prominent institutions and prominent names being part of this QIP is what we understand from sources. On the back of that, the stock is up 1.3%.
All right, with that, it's a wrap on this edition of Market Fatafat and all the stocks. Actually, we are completely out of time. Akshay and Janay, thank you so much for taking the time out and joining us today. But we are not done yet with the show. We have an exclusive, catch up that my colleague Asa Chopra had with the head of wealth management and private banking in IDFC First Bank on his views about the entrepreneurship in India. Let's go across and listen into this slice of that exclusive conversation.
The businesses are now going global. A lot of these enterprises that you see in the list are no longer just serving India, but a lot of them are actually global enterprises. So that's a very important trend that's emerging, and that makes us feel very proud India is being put on the global economic map now. Second being innovation as the foundation. So these are not just same businesses being done differently or more efficiently. These are actually business ideas that are solving real world problems and challenges, right? And that gives us a lot of confidence when we look at the list and read the report that these businesses have the potential to scale up globally and become global multinationals. Third being the emergence of women entrepreneurs, right? And that is a very, very heartening trend to see that women are taking the pole position as far as entrepreneurship is concerned as well.
It's a huge market. What are the basic sectors you're looking for, and what are your hopes that which sectors will emerge and which is important for India to come up with the coming years?
So see, we are very privileged and feel very proud to be associated with a research report of this quality. We are very, very excited about partnering, like I said, with these entrepreneurs, the businesses that they've created, and it's our commitment that it's not just not a research report association for us. We are committed to partnering with these entrepreneurs and these enterprises in whatever way we can, in whatever contribution we can make in helping them create great businesses and contribute to building a great Indian 5 trillion economy as we call it now.
Okay, all right, that's the word coming in, exclusive word from IDFC First Bank. But on that note, we'll wrap it up on this edition of Market Fatafat. Ankita and I will take your leave. But as we do that, let's go across and hear in from Ajay Srivastav of Dimension Corporate Finance Services. He names hospitals, pharma and IT among the sectors that he's positive on. But what are the spaces that he would like to avoid? Let's go across and listen in.
So number one priority is hospitals. Number two priority is engineering services companies, including engineering companies, is the second priority. Pharma, which is the I'm talking the generic side of pharma, not a CDMO, is the third side of the company. IT, we remain positive on it, given what's happened to rupee dollar. And anything you find which is doing decent exports, and that's where engineering company comes into play. I think they will do tremendously well. You saw rupee dollar at what it is. You're selling literally forward dollar at 87 today, 87 and a half. And that's, your profits are locked in for 2 years thanks to exchange rate. So engineering services, hospitals, newer themes. You just saw a guy coming up with diamond rating. Who never thought we'd buy a share like that? But that's what it is. The newer themes are coming up. And of course, very select defense names in the private sector. Some companies are doing extremely well with the order book. So you kind of focus yourself. And then, as I said, there is assortment of choices you get today. One we are not buying is real estate. I think that's a sector which we think will underperform next year. Everywhere I go, people have bought 5 properties, 6 properties, and everywhere I go, there is selling going on. People want to now start selling. Wait till the exit rush starts next year for real estate. My guess is real estate would be one sector which you want to stay out of for some time next year. I may be wrong totally. It may overperform. But I guess that sector has issues of overpurchase in the market as when consumers and a lot of resale hitting the market.